Right, let's give you the markets update now. The rand weakening for the third consecutive session on Thursday, and the JSE, though, bucking the global, or should I say firmer, global markets as warnings of intensifying power cuts weighed on sentiment. The local currency touching an intraday low of 19 rand 48 cents against the dollar, as the outlook for South Africa remains gloomy, with the possibility of stage 8 load shedding making headlines. Well, Zwelakhe Mnguni is Chief Investment Officer at Benguela Global Fund Managers, joining us now for a quick markets update. Babu Mnguni, thank you for your time. Let's get that quick overview of how the markets have opened in early trade.
Yeah, good morning, Polly. I think our market probably owns slightly open, slightly positive, but I think the financial sector is probably going to come under a bit of pressure, mainly because we are getting a review of our status with the S&P today. And I think the last time they upgraded our outlook from positive to neutral, I think we might go negative. And if they consider the energy situation and the GDP growth situation to be very bad, we might see another downgrade. I mean, we're getting down. It would be a downgrade into a deeper junk status rather than just a downgrade from quality to below quality.
Yeah, well,
I think if you look at that, I mean, the rand has taken a beating in the last few days. There's been a lot of people moving money out. I think the foreigners were selling, and we have been under a bit of pressure on the rand. But yeah, I think maybe we might see some areas of the market coming back. The rand is a weaker rand is favorable for resources. And also, if you look at the market in the U.S., sentiment looked like the market was expecting that a deal would be done in the U.S. about the debt ceiling. That would basically free the market to operate back again, slightly more on fundamentals.
Well, here's something to lift that slight or that gloomy picture. According to NAMSA's quarterly review of business conditions for the South African motor vehicle industry, the new vehicle sales during the first quarter of 2023, they recorded an increase of 1.6%. That's some positive, isn't it?
Look, I think it's positive, but I think it's also, we have to keep in mind that one thing I observed about that is that the actual production has been, the capacity utilization is running at full blast. So I'm just a bit concerned that we'll see the slowdown on the front end on the sales side, which I think is happening. I mean, if you go quarter on quarter, I think it was 0.2% increase, but if you go year on year, it was 1.6. I think the point I'm making is we are likely to see a slowdown in vehicle sales. Normally, when interest rates rise, people stop or defer the purchase of things like vehicles. And you have a situation like power crisis. People are losing jobs, so it might affect the economy, the broader economy. But I do think that we have to be cautious about the next few months. We might see that we are ending up with a lot of inventories from production. We are not getting the sales coming out on the other side.
Makes sense there. All right, let's talk about Chem Pharmacies publishing its results for the 12 months, which ended on the 28th of February 2023. How have they fared?
Look, the numbers were decent. I think they came out with a 17% growth in earnings on the back of a 9% growth in revenue. I think if one looks at their retail business, I think they seem to have done okay. I mean, on a like-for-like basis, the revenue was only up 3%. But if you strip out the effects of the COVID that had inflated the previous number, it looks like they were up 8.4%. So that was positive. I think the wholesale business is also doing well, still dependent on their own pharmacies, but it looks like they were able to get almost 8%, I think 7.7% there in terms of the growth. So the numbers are positive. I think they probably will have to sweat the pharmacies a bit more to try and get more productivity out of the stores.
Let's conclude with Tharisa also releasing interim results for the 6 months, which ended on the 31st of March 2023. How are their numbers looking?
Look, their earnings were up, or at least the headline earnings were up about 13%. But I think if you look at the top line, and it was function of, there was numbers that they've stripped out in the headline earnings that was in the 2022 numbers. But I think one thing I observed is that production is down a lot. I think the situation with the electricity is affecting them, but I think they have their own teething issues. But if you look at the production in the PGMs was down 16%, in the chrome market was down 1%. I think that then filtered down to the operating profit level. So there was a bit of pressure on operating profit and EBITDA, which were down 29 and I think 27% respectively. But not a good number. I think the story across the mining sector, production coming under pressure, commodity prices flat or slightly down, and then companies trying to their best to get some energy back on their mines.
Zwelakhe Mnguni is Chief Investment Officer at Benguela Global Fund Managers. Thank you very much for that markets update.